The market is full of surprises, but surprises come with opportunities. Opportunities are not easily identified. You need to search for them. How then can a freelance investor identify opportunities in the market? Let's briefly discuss that before diving in deep into this week's episode of This Week in Markets. You are a teacher, an accountant, a nurse, or any other professional. You've just heard about an investing or trading platform such as Easy Equities. The first question you need to ask yourself is, how do I navigate this investment or investing life? We shared a video of how to navigate Easy Equities a week ago that I believe you really need to check out. There are three main schools of thought when it comes to analyzing the market. The first one would be the fundamental analysis. Fundamental analysis involves scrutinizing financial and non-financial information, analyzing financial ratios, the corporate governance of specific companies, market conditions, to name a few. This analysis looks to see whether an investment is overvalued or undervalued. But in a nutshell, it involves three things: economics analysis, industry analysis, and company analysis. Fundamental analysis is one of the cornerstones of investing and gives you tools to help identify or rather determine the value of different investments. The second one will be market sentiments. Some investors believe that the markets are moved by how an investor feels and how they react to specific information. Basically, they are driven by emotions. So they sought to predict how the market will move when certain things happen. The last school of thought is technical analysis. This method uses statistics, indicators, and trends. Technical analysis looks at patterns in the price of an investment to predict future movements in the investment's price. In the long run, you learn how to use these techniques and tools to build a good investment portfolio. Remember, this link platform shares information. The platform will not tell you where to invest your money. The platform's goal is to share what's already in the market in a simplified manner, breaking down economic, industrial, and company information for a freelance investor to understand. We will dive into the discussion of these schools of thought as we continue to roll out new segments. For now, let us look into the business of the episode. The JSE followed weaker global trends on Friday as the latest corporate results in the US disappointed investors. The rand touched a 3-month worst level on the back of a strong dollar. Investors have been trying to navigate the market, considering the fight to reduce inflation. Many investors are looking at how central banks will react in future when it comes to interest rate hikes. The JSE decreased 1.29% to 78,985 points, and the top 40 shed 1.38%. The industrial metals and mining index fell 2.59%. Precious metals and mining retreated 2.51%. Resources took a knock of 2.28%, while banks were 2.08% lower and financials edged down 1.76%. The president on Thursday declared a national state of disaster on the electricity crisis, taking immediate effect from the time he delivered the SONA, and also announced he will appoint a minister of electricity. Citizens had mixed reactions, with some thinking that it is a clean way for government to loot more state funds. Proponents of the idea believe that this might be a good way to implement the president's plan to resolve the energy crisis. Part of the solution is investment in renewable energy, and perhaps a freelance investor might want to look more into possible investments within the renewable energy industry. The rand hit 3 months low this week as a result of the firmer dollar and softer emerging markets currencies. The value of South Africa's mining production for 2022 was reported at 1.18 trillion rands, going above the 1.1 trillion rands record reported for 2021, boosted by strong commodity prices. These figures were announced at the mining Indaba that took place in Cape Town this past week. The Minerals Council South Africa's data reported that the industry contributed positively to the domestic product by increasing employment, recording higher taxes, and thus directly contributing to GDP. According to the council, mining companies paid 74 billion rands in taxes and 14 billion rands in royalties in 2022. However, Transnet was flagged as a problem to the productivity of the industry, followed by load shedding and stagnant investment in the sector. Oil saw an amazing increase this week, driven by geopolitics and China's economic reopening from the pandemic. Stock markets across the globe sank this week as a result of US interest rate hike fears following the job reports last week. This happened despite the news that Britain has avoided recession. Inflation still appears to be the rival of the year for many economists. They say there are two things that are certain in life: death and taxes. The latter is what Coronation faced hard this past week. The company was fined with a heavy tax bill. The firm's share price dropped as much as 11.8%, the steepest intraday fall since April 2020, before closing 11.05% down at 31 rands 80 cents. We will be discussing more of this story in one of our segments coming up soon. This brings us to the end of episode 4 of This Week in Markets. I am Billy. All thanks to Zoe and the team. See you again next week.